The PE ratio is a primary indicator of the health of a stock. It is one of the most basic essentials in looking at the valuation of these stocks. Just like inflation and employment numbers, they are fake, fraudulent, and can be manipulated to suit the needs of the government or corporations. You came here for the truth, so let me unveil that for you. Today, we are looking at this manipulation of the PE ratios. I also want to connect that in with a few others. Let's begin with this. This is just one example, but it shows what funds can do in order to make their situation seem a lot better than it is. We know that there are stocks, particularly in the tech sector, which have PE ratios that have gone astronomical. So what they do is utilize this strategy in order to make it seem that it's not so risky. So within a given fund, you'll have many stocks. In this example, let's say there are 4. So stocks A through D. And you'll notice that stock D has a PE ratio of 300. But you take that over the average, and suddenly it's 90. Now, while the 90 is still high, that isn't over yet. They use something called the reciprocal. So in this case, the reciprocal of the PE ratios. And they are able to get this to look like it is 21.5. Now, if you take stocks that are there, even the average at a 90, and are able to turn that into a 21.5, you have what I would call a fraudulent figure. There's no other way to put that. So this is just one thing that I wanted to show you. I believe it is very important when you look at any of these numbers. Understand that just one of them isn't really a good indicator. You need to get hundreds and hundreds because they are all manipulated. They're all fraudulent, and we necessarily can't just look at it at face value. So let's move on to this. We're looking at Detroit. You know the situation in Detroit has become from bad to worse. Look at this. Detroit's decade-long wave of tax and mortgage foreclosures has wiped out large swaths of the city's neighborhoods as Wayne County continues to seize thousands of occupied homes a year. All right, now check this out. And while the city's neediest homeowners were supposed to receive federal assistance to save their homes as part of the Treasury Department's 7-year-old talking about this fund, squandered its original allotted $500 million by creating unnecessarily stringent requirements. So people who should be getting the funds aren't getting the funds. Does that ring a bell to anybody? Think about what happened with the TARP bailout. Think about what happened with the Fed's $16 trillion bailout. It is all money being squandered, money being used in a way that it shouldn't. We know that. So let's move on. This article out of Bloomberg is talking about the issue that's happening with China. And China has been buying media corporations in the US. And this has gone on for now quite some time. It has expanded. But in this article, and I believe it's good news, at least we're taking it as at face value, China plans to cut off some funding for the billionaire here after concluding the conglomerate breached restrictions for overseas investments. So this is quite interesting, not just for this particular individual, this billionaire who's trying to buy up quite a bit of Hollywood, but it seems like it's taking a different turn. So I don't know where this is headed. I don't really know why this occurred. I have always thought that China would want to have as much influence as possible, but perhaps the government itself wants to be able to hold on to that and doesn't want them to necessarily branch off into the US too much. They want to have full control and jurisdiction. Central banking increasingly looks like an act of faith. And this is quite interesting coming out of the New York Times. Mario Draghi, the president of the ECB, and his Bank of Japan counterpart, Kuroda, have spent trillions of euros and yen without generating as much as inflation as they want. Yet they have little choice but to insist that their policies will eventually work. They don't have the inflation that they desire. They can't even get people working. They are unable to basically get the economy moving in any way, shape, or form. And yet today, we have these central bankers still up there wearing their crowns at the helm, and they tell you and I what to do indirectly. But why? What are the benefits to us? Of course, there are none. And last but not least, I wanted to show you Japan right here in this chart. Now, if I can just scroll down for a moment here, you're looking at the Japan money statistics. The beginning of the chart being 2008 and moving up until the present day. And what you see here is a comparison of the different monetary levels. You're looking at the Bank of Japan balance sheet being the one that has gone astronomical. Compare that to all the different types M1, M2, M3, and L. Whichever one you look at, they have all expanded. However, compared to the Bank of Japan balance sheet, nothing even comes close. So think about that. With all the money that has been pumped into the system, nothing even comes close to the value that they have created. They have been printing up money just as the Federal Reserve has tapered off and decided that they weren't going to print anymore for now. The Bank of Japan, the ECB, they continue to expand, and this money gets slushed around and gets pushed all over the globe. This is quite interesting to me. I think that they will continue to do so. If they decide to pull back on that, you best be sure they are headed for a crash. Now, that's all for this video. If you found it informative, please give me a thumbs up. And I just wanted to say that I'm working here off my cell phone, so I hope that the quality is okay, it's reasonable. This will be for a few days. I hope that you'll take it for what it is. And that's all for this video. Definitely check out my website, themoneygps.com, for more free information, free ebooks, and so much else. Take care.